Good morning, everyone. Today we are going to start a topic called marginal costing. In marginal costing, the most important thing is this format, you can say. Okay, what the marginal costing, or as I said earlier, also in marginal costing, we have two type of cost. One is variable cost and fixed cost. In marginal costing, we believe we have to recover variable cost. Fixed cost can be recovered over the period. We believe fixed cost is a period cost. Yes. So as the definition suggests, marginal cost is nothing but it is the change in the aggregate cost due to change in the volume of production by 1 unit. That means when you change your production by 1 unit, okay, when you increase your production by 1 unit, whatever additional cost it comes, we call it as marginal cost. So it is nothing but the cost of making one additional unit. Okay, beta. So we call it as variable cost. Okay. So variable costs include for making one additional unit. What expenses you have to incur? We need material for that. We need labor charges for that. We have to incur direct expenses and some other variable costs. Give me my total variable cost, which is also called as marginal cost per unit. Is this part is clear, everyone?
Yes.
The next one, the definition of marginal costing. See, earlier we have studied in last slide, we have seen that marginal cost. What do you mean by the marginal cost? Now in this slide, we are going to study or we'll know what do you mean by marginal costing. So what's a marginal costing is nothing but it is finding out the cost and measuring the impact of that one additional unit production on the profit. Okay, that means how much profit is being affected by making one additional unit. So the definition says ascertainment. The definition of marginal costing says ascertainment of cost and measuring the impact on profit of the change in volume of output or the type of output. When you are increase the production, okay, when there is a change in production, that one additional unit of production, how much profit is being affected by that calculation is called as marginal costing. So it is nothing but it's very useful technique for the decision making. Okay, we'll see how the decision is being made in this. In marginal costing, costs are segregated. As I earlier said, marginal costing believe there are two different sets of cost. One is fixed cost and one is variable cost. But marginal costing believes that variable cost, that is a production cost which is related to product, that every businessman or every organization is supposed to recover. And marginal costing believe that fixed cost is a periodic cost. It is not a product cost. Okay. So that can be recovered over the period. Clear, everyone? So just simple distinguish we'll see from absorption costing and marginal costing. Absorption costing is nothing but it's a normal costing, which we can say it's a traditional costing where we recover both the cost like variable cost as well as fixed cost. So see, in absorption costing, it is nothing but it is a costing system which treats all manufacturing costs as product cost, whether it is fixed cost or whether it is variable cost. But in marginal costing, we treat only variable manufacturing cost as a product cost, and the fixed cost, as I said earlier also, the fixed cost is regarded as period cost. Okay, any doubt, any confusion till here, beta? Anyone?
No, sir.
No, sir.
Okay, fine. Then next part is, see, this is the format of marginal cost statement, one of the very important format. Okay, we can say the marginal costing topic is totally based on this format. If you know this format, that means let's say the 70% of the marginal cost topic. Okay, so how the format goes, first we have to start from sales and we have to reach to the profit. So how it start, we have to see first what is the total sale you made. Okay, let's say, take an example, sale is 10,000 rupees, and for making this sale, whatever variable cost you have incurred, let's say it is 4,000 rupees, then when you deduct variable cost from sales, you will get the contribution. So can you tell me the answer for this? What will be the contribution, beta? 10,000 minus 4,000, that comes to 6,000, na beta?
Yes, sir.
Yes. And there is a fixed cost which we are going to incur. So whatever amount, let's say in this, the fixed cost is nothing but uh, it is 2,500. Okay. So now tell me what will be the total profit. Come on, tell me what will be the total profit. Come on, fast, calculate and tell me.
3,500.
Exactly, 3,500. This is how you have to keep this format in your mind while solving the marginal cost problems, because the maximum problem will be based on this basic format only. See, the format part which I did, it's for the total amount. Similarly, you can find out the marginal cost or the profit from the per unit also. Okay. So for that, you need to know what is the selling price per unit, what is the variable cost per unit, what will be the contribution for per unit, and what is the fixed cost per unit. If you know these things, you will easily come to know what will be the profit per unit. Is this part is clear, everyone? So both way we can use this format. For total cost also we can find out total profit, and for per unit also we can find out what is the profit, what is the selling price, and what will be the contribution. Okay, everyone, any doubt, any confusion till here?
No, sir.
Okay, fine. Now the next is about the contribution. As we can see from the format, we have just solved one basic problem. Okay, the contribution, how we got the contribution, bacha? It is nothing but contribution is a difference between sale value and what? Come on, tell me.
Cost.
Variable cost.
Variable cost, beta. Okay, well, then it is variable cost, remember. Okay, so the contribution is nothing but, it is total revenue, nothing but total sales. We have to deduct variable cost from that. We'll get what is the contribution. Okay, this contribution is very important part. We can say it is a central concept in marginal costing. But all problem, we can say all problem revolves and in this point. Okay, if you know the contribution, maximum part we can solve in any of the problem of this marginal costing. Okay, is this part is clear, everyone?
Yes, sir.
Okay, fine. Then the next one is one simple example I have taken here. Come on, solve this problem and tell me what will be the answer. So in this, let's say selling price. What is the next step? We have to deduct what, beta, out of selling price?
Variable.
Variable cost.
Variable cost. Very good. So
Contribution.
selling price minus variable cost gives you contribution, correct? And contribution where you deduct from,
Fixed cost.
you will get profit.
Profit.
Correct. Very good. So now tell me, what is the selling price given in the question, beta? Selling price per
200.
unit. See again. So we have data per unit and we have data total, correct?
Yes, sir. Yes.
So let's start. We'll quickly see. What is the selling price per unit we have, beta?
200.
200. And okay. So come on, tell me what will be the total sales now?
20,000.
Exactly. So 20,000 is your total sales. So what is variable cost per unit? Come on, tell me.
20.
No,
58.
bacha. Here you made a mistake. See, in variable cost, we have to take all expenses which are of variable nature. Okay. So your direct material is variable cost. Your direct labor is also a variable cost. At the same time, variable overhead itself is a variable cost. So it will be 20 plus 30 plus 20. Come on, tell me. Bacha,
70.
come on, tell me.
70.
Yes,
70.
exactly. So my variable cost is nothing but 70. That I have to deduct. Correct? So
Yes, sir.
similarly, can you tell me what will be total variable cost? Come on, total variable cost.
7,000.
70,
Exactly.
70,000.
No, 70,000, beta. It will be 7,000. And no, I think there is some mistake. Bacha, the total sales will be 2 lakh, na? And this is, you said is correct. It
70,000.
is 70,000. Fine, bacha, everyone?
Yes, sir.
Yes, sir.
Okay, fine. Come on, tell me now. What will be your contribution? The contribution will be 130, na?
Yes, sir.
Exactly. And what will be your total contribution?
1 lakh
1
30.
lakh 30.
1 lakh 30.
1,30,000. Correct?
Yes.
And see, fixed cost they have given per unit. Generally, this fixed cost doesn't vary with the number of unit produced. But as the data is given per unit, we have to go as per that rule also. Okay. So come on, what is the per unit fixed cost? It is 50 and 15. That comes to 65, correct?
Yes.
Okay. So here, and what will be total fixed cost? Yes,
65,000.
exactly, 65,000. Okay. So see beta, generally fixed cost will be given as a total amount. Okay. That we have to divide by unit to find out the per unit. But here the data total amount is not given. That is why we followed this rule. Have you understood now? Yes or no?
Yes, sir.
So come on, tell me what will be the profit bacha now?
65.
65.
Exactly, 65. And what will be total profit?
65,000.
65,000.
65,000. This is how you have to work out this problem. Any confusion, any doubt till here?
No, sir.
No,
That's why I
sir.
told you this marginal costing is one of the easiest topic of your syllabus this semester. Okay. So now see this, with the help of this, we can make formulas like this: sales minus variable cost will give you contribution. Okay. And same contribution minus fixed cost will give you profit. Correct? Yes or no?
Yes, sir.
Yes,
And
sir.
again, can you tell me contribution can be find with the other formula also? See beta, with this formula, come on, tell me what will be the another formula for contribution?
P minus P plus F.
Exactly. Profit plus fixed cost will also give you contribution. Yes or no? Everyone?
Yes.
But any confusion, any doubt? See, this is how you have to work out with these formulas to get your answers. Okay, in marginal costing. Is this part is clear, everyone? Is the formulas are clear to you guys? Everyone, tell me.
Yes, sir.
Yes, sir.
Okay, very good. First part of this marginal costing is completed here.